Hi everyone, today we're talking about Alibaba. Alibaba has been down massive pretty much this year mostly because of the China trade war. Jack Ma stepped down as well, and that kind of affected the stock slightly. But overall, it's probably because of the China trade war, and we're going to look at the earnings today, and I'm going to say my opinions of Alibaba right now, the stock going forward, and kind of what I'd recommend to do with the stock. So, Alibaba earnings mixed as revenue guidance cut, shockwaves. I like that, shockwaves. China e-commerce giant Alibaba reported mixed financial second quarter results before the market opened Friday. As earnings easily beat views while revenue came in light, Alibaba's stock wavered and was up as much as 4.5% in pre-market action before pulling back. Alibaba's earnings came in at adjusted 1.40 cents per share, beating analyst expectations of 1.06. It reported revenue of 12.4 billion, missing forecasts of 12.45 billion for its financial second quarter ended September 30th. Revenue rose 54% though from a year ago. Alibaba also curbed its full year revenue growth forecast by 4 to 6%. So overall, not too bad to report in this earnings. Obviously, the earnings per share was absolutely amazing. The revenue obviously was a little bit of a miss. It wasn't huge, so that's not too bad. And when you look at actually the revenue growth, 54%, that is super growth. That's even better than Amazon's growth, which is crazy. I think the big thing to take from here is I've talked about this on the channel before. Whenever a company kind of does, it doesn't really matter what the earnings are like. If it comes out and the next couple of lines are, and then it cut revenue forecast for the next quarter, the next financial year, that always has such a negative impact on the stock. So in this case, Alibaba, the full year revenue was cut by 4 to 6%. So obviously that affected the stock big time because of that. But when you look at it in general, I mean, 54% revenue growth is absolutely insane. That's a really good growth to have. Even with a 4 to 6% cut, that's still a pretty good growth. But this kind of earnings report does show that the Chinese economy is slowing down. The trade war is slightly starting to affect the Chinese economy. So that's something to take into consideration. But when it's 4 to 6% on a 54% revenue growth, probably not too much to be getting that worried about. The stock price is amazing. When you look at the forward earnings, that's really good. I think the P is down towards 20 now. It's at a cheap price to be buying Alibaba. You've got to keep thinking about the growth side of this, and I do believe when the China trade war is over, Alibaba will go up quite a bit. I mean, this stock, in my opinion, should be around about the 250 per share mark, and it's not. So it should get somewhere up there at some point. So I do believe it's undervalued. We look at the earnings report, and the revenue from the cloud computing increased 90% from a year ago period to 825 million. Mobile monthly active users reached 666 million, so that was up from 5% from the quarter before. So it's still growing big time. Revenue side of it is amazing. Yeah, in general, this stock is definitely massively undervalued. And like I say, I think if this wasn't a Chinese stock, this stock would be valued about 250 per share at least right now. But that's affected it. Being a Chinese stock as well stops it from being in a lot of financial managers' portfolios, because they see like the risk side of it as well. Other things as well, like the accusations of reporting wrong numbers and what have you. But solid company in my opinion, and I think when the China trade war does blow over, it will go up. Not bad earnings. Obviously, it's a little bit disappointing to see like the forecast cut, but you still got to consider that it's going to be in the 40%, the revenue growth of it. So yeah, like I say, I think it's a great company. I think it's still a very investable company. I would not probably invest until like the China trade war calms down, and we see Alibaba pull back about 10% ish. then maybe that's a good opportunity to be getting into it, in my opinion. But yeah, it's one to keep an eye on, in my opinion, and potentially look to invest in. Alibaba and Facebook, I've said before, are companies that I'm waiting for a little bit of a pullback, and then I might invest into them again. We'll see what happens. But that's the video for today, guys. Talk about Alibaba's earnings. Hope you enjoyed the video. I've got a few interesting videos coming out this week, I'll say. A lot of like company battle things about which is the better ones to invest in. Them coming up. So I'll see you on them videos. Give the video a like, subscribe. Thanks for all the support recently. It's been absolutely amazing. And I'll see you in the next video.